Welcome everybody to the weekly outlook for this upcoming week. So now all the markets have opened up. We already know that all the fundamentals over the weekend have already been kind of pricing in. Now we're going to take a look at, what's happening for the rest of the week. And then of course we have Stefanos here for the technical analysis.
As always, what's up, guys? Hope everyone's having a great week, had a great weekend, productive, like always. Let's get into some breakdowns. I apologize also for not being able to, we were pretty busy the last, 2 weeks?
Yeah.
It was 2 weeks? Yeah, we apologize. So
yeah.
This is what we do.
We'll try to get as much as we can out there to you guys.
Exactly.
But if we do, miss a week, we also have Wednesdays now that we are trading live on YouTube. So if you weren't here last week and, you didn't really know about it, now you know for this week and the upcoming weeks, every Wednesday, it's going to be on the same exact YouTube channel. And you can come and talk to us pretty much and get your questions answered about anything in general.
Yeah, that's really why we thought that'd be a good idea as well, other than just adding to the community, but also like my time is dedicated in the morning, every single morning throughout the week, where I'm trading live every single morning. So knowing that we have that, but then sometimes in the afternoons, it's hard for us to do these breakdowns. It's good to at least give some of that back. And obviously that was a good idea from a lot of you guys too, asking us to trade live. So we're like, it's been long enough. We might as well do it.
Yep. So the best way to actually take advantage of that, and then we're going to go ahead and get into the breakdown just shortly here, is, watch these weekly outlooks that we are providing to you guys. We're telling you the fundamentals, we're telling you the exact price action levels and what to expect throughout the week, right? So pretty much free trades that are given out. You just have to follow them throughout the entire week. So do that in the beginning of the week, Monday, Tuesday, whenever this is posted and you're able to take a look at it, and then come to the live sessions on Wednesday. So then you're kind of up to date with what's going on, and we're just going to review everything that has happened, where are the updates in the market, and what can we expect for the rest of the week. So it's just going to better prepare you guys for that live session on Wednesday. All right, so let's go ahead and get into the weekly outlook. So we're going to get into the fundamentals first. Today is a little bit heavier on the fundamentals, given everything that has been going on in the last week or so, especially over the weekend. And then also now we're headed into a new month, November, and then you have December. So a lot of the price action is also going to look very similar to what we saw the last week. So every time you come closer to the year end, and also it's the last quarter of the year as well, you want to be very careful because there's always a ton of fundamentals that are coming out. There's always going to be elections. There's always going to be a back and forth that's happening globally. So you want to pay real close attention to the fundamentals. So we're going to start off with OPEC first. And the reason why I wanted to do this was because this is going to tie right into gold, as we know that gold reflects a lot of global macro fundamentals. And so we know energy prices are also increasing across countries. And then let's see what OPEC has to say, because they are the ones who are controlling oil production. So OPEC heads for a clash with Biden as members reject call for more oil. So well, OPEC is pretty much a cartel, like they said, and it's a group of countries that come together, right? And including Iraq, you have Algeria, you have Angola, you have Nigeria, you're going to have Saudi Arabia, you have Russia, you have all these countries that are coming together, and they're pretty much looking at what's the global demand of oil, what are the global economies doing? And so we know that in the pandemic, a lot of the economies that slowed down, and that's because they were shutting down, right? They were going into lockdowns. And so businesses were closing. And so the demand started to decrease a little bit more. People were working from home. So they weren't really driving to work and commuting and this and that. So that demand started to drop down a little bit. Obviously, to match that drop in demand, you have to decrease the production. And that's what OPEC did. And so last year and even earlier this year, what they did was they looked at the projections for 2021 economy. The major factor here is still COVID. Right. So that is also the driving factor that's determining all the decisions for central banks, for governments, for this cartel. So they're looking at COVID and they're saying that COVID is still around, right? That hasn't gone anywhere at all. And so because of that, they're still gradually increasing their output for oil. Right. So they're not saying that in 2021 economies are opening up. You have the vaccines. So here's a ton of oil production. Right. So they're trying to keep it at a slow pace. But because of that, what we have seen is energy crisis going on. Pretty much prices for oil increasing everywhere. And now that's being reflected going into a lot of other sectors of the economy. And at one point, we also heard about UK saying that, hey, get used to these prices for a while right now. So at the moment, if we just scroll down a little bit, we see that OPEC at the moment has agreed that they're only going to do a daily production by a boost by 400,000 barrels each month, and that there is no need to deviate from that at the moment. And that's Angola's oil minister. But Biden has an issue with that, and a lot of other countries as well, because they're saying that, hey, increase the oil production faster so then you can help decrease the prices. Basic supply demand prices economics, right? Where you increase production when there's already a huge demand, increase the supply, and then you kind of balance out the prices there too. And so that's what they're asking for. But the OPEC said there's no need to do that right now. And that's because, again, COVID being a huge factor into that. COVID is still around. We are seeing increasing cases all across the world. We are now starting to see in certain states in the United States itself where the government is telling them, like, hey, the hospitals, like, hey, you can turn away patients because they don't have enough space. Cases are increasing again. And a lot of that is coming from, you're going into the holiday season. We have opened up international travel in a lot of countries and easing up restrictions a lot more, which is obviously resulting in more cases. So we are starting to see the American gasoline is at a 7-year high. We are starting to see prices increase up to $85 a barrel. So if you're following US oil, you're probably going to see that. And so we're seeing the US, India, Japan, and a lot of other importers waging a campaign to force OPEC to ease last year's pandemic, trigger supply curves more quickly. But again, that's where OPEC comes in and they're like, we're going to look at the projections for this upcoming year, and COVID is still a big problem. So until that goes away, you're not pretty much going to see a huge production into oil unless there's external factors coming into play, which pretty much just means if that cartel OPEC is being forced, but they need to see the numbers, supporting numbers to increase that oil production, or else you're going to end up in the same situation where last year we saw tons of barrels of oil just sitting on ships in the sea, in the oceans. So that's pretty much the key point right now in this article. And then as you continue down, you're going to see a lot of different views pretty much, and why is the US pushing for more. And there's actually one more key point that I missed here, which is that the sentiment and the analysts have speculated that if OPEC doesn't change pretty much increasing the production, if they don't do that, then the US might sell some of its strategic petroleum reserves. So we're going to go ahead and take a look at what's going to happen over the coming weeks or so, going into the end of the year. But again, oil is a commodity, and so it is still valuable. Oil is used in everything, manufacturing, services, whatever, people traveling from work, going home, whatever it is, oil is used everywhere, right? So this is going to be interesting to see. And as we're coming close to the year end, we're going to continue to see more fundamentals. And then some more global macro fundamentals before we start getting into specific countries is China's economy weakens as power crunch. The reason why I count this as global macro fundamentals is because we know China is one of the biggest economies in the world. So if China is struggling, you're going to start to see a lot of other countries struggling too. That being one of the biggest manufacturers in the world, if it's struggling from that perspective, that's also what's leading into the supply chain crisis that we're seeing right now, right? So that's why I count this as macro fundamentals.
Direct correlation.
Exactly. So we're starting to see China's economy showed signs of further weakness in October as power shortages and surging commodity prices weighed on manufacturing. So now you guys can kind of start to make that connection between oil news, between the supply chain crisis, and what's happening from a global economic perspective. So the PMI numbers, they've started to drop. They're kind of sitting around that 50 mark, which is the key mark. Above 50 translates directly into expansionary, and then anything below 50 is contractionary. So right now it seems like the PMI of that economy, of China's economy, is under pressure from both the supply and demand side. So we're starting to see manufacturers struggling with electricity shortages, rising costs, while consumer spendings remain as weak government COVID zero approach. So what they're pretty much doing is, because cases are increasing and they have been starting to put into more restrictions into play, now we are starting to see that there's also restrictions on consumer spending coming close to holidays. We know around holidays spending increases, right? And that usually is what boosts a lot of the current currencies as well, increasing up their value. But now we're starting to see that the government has a COVID zero approach, meaning a tightening of restrictions around travel, social gatherings, and then also consumer spending in general. Going into November, the non-manufacturing PMI could drop significantly on the new wave of COVID-19 and China's increasingly harsh zero COVID policy. So this, now think about how is that going to relate into that supply chain crisis that we're seeing, the energy crisis that we're seeing, you know, all that type of stuff from a macro global perspective. And then how does that translate into when you're trading gold, when you're trading the yen, when you're trading the dollar, right? So this is something else that I wanted to bring up. And then as you go down, you're going to continue to see some more details. They're going to talk about Evergrande down here as well, where the housing sales have dropped, home prices are falling, and the debt crisis at the property developer Evergrande is spilling over to the industry. So now we're starting to see those effects coming into play as well. That rippling effect from Evergrande going into the rest of real estate industry. And then as you continue down, you're going to continue to see some more. But those are some of the key points that I want to highlight here. As China is starting to struggle as well, we're starting to see OPEC pretty much saying like, hey, we're not going to be increasing production. We're fine where we are right now. So now start thinking about this on the macro fundamental perspective as you trade gold specifically. All right, so getting into Brexit. So we know that there were negotiations that were going on between the UK and the EU, and now we have some updates on that. So France's president backed away from his threat to punish the UK for restricting the post-Brexit access of French fishing boats in British waters. So we know that fishing is still one of the key problems that they're having, both of the parties, along with Northern Ireland. And so a key date, this is a key week, and now we're starting to see, even last year, if I can draw that parallel, is that last year we started seeing those negotiations around Brexit. Now this year, same time of the year, we're starting to see these negotiations, back and forth discussions happening on post-Brexit. So Brexit hasn't gone anywhere, and now you're pretty much coming into the same exact picture where there's back and forth, there's uncertainty, but we're still seeing the pound gaining strength. Right. So now if you're looking at even from just a price action perspective, which, you know, Stefanos and I are going to get into later on, you're seeing the same exact thing from a price action perspective as you're seeing from the fundamentals between both years. This is a start to a very important month and even a very important quarter going into December.
Monetary policy week or month.
Yep. And so they said the British are going to come back. So they're going to go back to the French. And they're going to talk about further proposals, and they're going to see where they are at the end of the day. So tomorrow's New York session, you want to be kind of careful as you're looking for trade opportunities, especially if you're trading any Euro or GBP pairs. So they're not going to be bringing in any sanctions while they're negotiating, which is a good thing because this is something that they were talking about. So France had threatened to introduce additional custom controls on goods entering from Britain and block its fishing boats from landing their catches in France if progress wasn't made by midnight today. But now they're saying that the British are going to come back to them tomorrow. So they're going to take a look at what's going to happen at the end of the day. The chances are either they're going to come to a negotiation, which it doesn't seem like is going to happen, or they're going to continue pushing this deadline and they're going to say by Thursday, by next week, this and that, negotiations are still happening. Pretty much the same thing that they did last year when it came to Brexit. And so as we continue down, we see that Brexit Minister David Frost is going to travel to Paris on Thursday. So again, tomorrow's an important day. And then you have Thursday where the Brexit Minister is going to be traveling to Paris to hold in-depth discussions with France's junior Minister for European Affairs. So there's still this back and forth that's going on between, like I said, the UK and the EU, and they're talking about this Northern Ireland protocol. They're talking about any amendments that they can make to it because it's hurting the UK's economy. They're talking about fishing, you know, all these different post-Brexit issues that they still haven't resolved, even though it's been like 10 months after they signed that agreement. And then there's like this back and forth that's going on between them pretty much. And the UK said that it would take legal actions if France follows through with its threats, which is pretty much placing more sanctions on them. And then it also warned, the French government also warned that it would raise energy costs for the British Channel Islands, which are heavily reliant on electricity from France. So now you're starting to see this back and forth, pretty much what's going on. And that's what you're going to continue to see throughout this article as you continue all the way down. But the key point here is we're sitting at key levels when you're looking at the pound, when you're looking at the euro from a price action perspective. You're also starting to see more fundamentals coming out around Brexit, around macro fundamentals. So you want to be very careful as you start looking for trade opportunities this month and next month, and possibly even half of January. It's the same exact thing as last year. So if you missed trade opportunities last year, you want to be going back and taking a look at what happened from a fundamental perspective and a technical perspective, and how can you cash those trades again. Now going into Japan, so we see that there's a Prime Minister Kishida's stronger than expected election victory, and now they're talking about a stimulus package, which is going to show whether he's a big spender or a budget balancer. The key thing here is when the last prime minister was in office, they actually didn't spend all the money that they were actually talking about spending, the package, right? So there's a lot of money that's still left over, but this new package is expected to be unveiled before the end of the month. So you want to be watching out for that. It's likely to include cash handouts. This prime minister is very heavy on cash handouts, and you're going to see that throughout the article too. And relaunching of domestic travel subsidies. So now obviously you want to help pick up that traveling industry, the airlines, all that type of stuff. So how do you do that? By providing subsidies. But he did say, he hasn't put a figure on the spending, but he did say that it's going to be worth trillions of yen. And matter of fact, there's also, as we continue down, which is right here, the coalition partner has pledged in the election campaign to give 100,000 yen for each household member aged 18 or below. And as you continue to give out cash in the economy, what happens? A weaker currency, you know, you need to, how are you going to bring back all that money that you're putting in? I understand.
Bad idea.
Right? So we've seen this happening across economies in just the past 2 years almost.
You're incentivizing people not to work. What kind of society is that? Like, I get it. I mean, with the pandemic, like that needed to happen, but that much, incentivizing people that much, paying people that much, it's just, it's gonna come back. You're gonna get taxed by inflation. That's another tax. So like, what do you want? You're also seeing the supply chain issues from, again, bad policy, and it just trickles down, and it affects the poor, and it affects the middle class even more than they even thought. So it's just, they keep doing it, and then they mortgage kids' futures. That's why I think there should be term limits, because you know, when you're that old, you don't really care about the future as much, it seems like. So
now going into US, and we're almost done here. What we're starting to see is this back and forth again happening between senators, where you have senators who are saying they need more time to assess the impact of President Biden's $1.75 trillion tax and spending package. And there are some senators who are completely all for it, and they're saying like, this is exactly what people need right now. This is exactly what our consumers need right now. But we have senators who are saying like, you're going to just end up adding $29 trillion of debt that no one seems to really care about or really talk about, right? And so we've already risen the debt ceiling this past month, and now there's going to be another vote that's going to happen in December. And now if this package passes, then you have more debt, right? And so again, the question comes back, how often are you going to continue to do that? Or is this just a new gateway that you have opened for the future administrations, where it's just easy, just go ahead and increase the debt ceiling? How long can you do that for? You're gonna, as you continue down, you're gonna see this back and forth that's happening here between senators and between officials within this administration, who are saying that, hey, this is exactly what we need. And then some people who still have concerns about inflation, and they're saying that, hey, this package is only going to drive up the deficits or inflation. And then we also have, almost done here, where Yellen dismisses Treasury market jitters, sees solid recovery. So here what we're starting to see is the bond market being concerned about monetary policy makers squelching economic growth and expressed confidence in continuing recovery. This is from Yellen. So she has expressed confidence in the continuing recovery from the COVID-19 pandemic. Again, how much is that recovery going to actually happen when you're looking at adding more trillions of dollars into the debt? And so as you continue down, you're going to see the same exact thing, where they're trying to see this boost of, or they're trying to push this positive sentiment of confidence and boosting confidence into people and saying that, hey, no, we're on path to recover. So as you continue down, you're going to continue to see the same exact thing over and over again, where the numbers are not in their favor. They're talking about unemployment rate dropping, this and that. We have the data. It's just fluctuating, right? We haven't seen consistent drops happening in a healthy manner. And then they're talking about the package here. So you're just going to see this, false sentiment that's being pushed out. And then you're also seeing, let me just go ahead and continue into this one. And you're also going to see the equity market strengthening. But again, you're just coming to a year end, right? And we have seen this over and over again, which in the stock market, they call the Santa Claus rally, right? Where as spendings increase, you start to see equities gaining strength because you start to see people going out and spending a lot more money. You start to see corporations earning more revenue. You start to see stocks increasing in value. So they're trying to push the sentiment alongside. So these are some of the things that you could take a look at. The reason why I also look at the stocks one here is because like Stefano said, this is a month of monetary policies coming out, interest rates coming out, and the Bank of England policymakers head into their November 4th gathering, knowing that a failure to deliver a once unthinkable interest rate hike would raise questions over their credibility with markets. So as we have talked about previously, where Bank of England talked about they're going to increase interest rates, but they haven't even talked about tapering yet, right? So if they talk about, hey, we can't actually increase interest rates yet, we're just not ready, or the economy is just not ready for it, then how are the consumers or the investors going to take that? And that the sentiment is that would raise questions over their credibility with markets. And then as you continue down, you're going to start to see US central banks. You are going to start to see, they're going to talk about the package, oil. So you have all these like macro fundamentals that are coming out. And then here are some key things that you want to be watching out this week. So it seems like Thursday is an important day when it comes to the US, Bank of England, and OPEC. All right, so that was pretty long, but let's just quickly go over the economic calendar. So we started off quite easy this week, and then you had European holidays, the French bank holiday, the Italian bank holiday, so quite easy London session as well. And then you have PMI data coming out. Above 50 represents expansion, and then below 50 is contraction. So that's pretty much all you need to really know. You don't have to pay too much attention to 60.8 versus 60.4. As long as you're above 50 and you can maintain that growth, you're going into expansion. As soon as you come back right below 50, you're going to contraction. And then interest rates coming out for Australia. And then also today's Asian session, you have monetary base coming out of Japan, the monetary policy meeting minutes. And then going into London session, you have a lot more PMI data coming out. So expect a little bit of volatility. And then going into New York session, you have the economic optimism that's coming out, and then not so much else, right? So tomorrow is going to be very heavy just on the technical side, not so much on the fundamentals. You don't have too much coming out in New York session. And then Asian session is going to be slow because there's a bank holiday in Japan. And then going into Wednesday's London session, you have the Spanish unemployment change, you have the French budget balance coming out as well. So some micro fundamentals coming out, not too much. And then you have ECB president speaking. So this is going to be the more important thing that you want to be watching out for in London session. And then going into New York, you have ADP non-farm. So this is NFP week. So start paying attention to any employment data that's coming out of the US. So you have ADP non-farm on Wednesday, and then you have some PMI data coming out, and then FOMC interest rates as well. So on Wednesday, expect some volatility as soon as the market opens up, but also expect it to consolidate until interest rates actually come out. And the chances are they're going to maintain it the same, and they're going to end up saying the same exact thing, which is we're on the path of recovery, but COVID still determines the direction or the outlook. So something along those lines, and they're on the path of recovery. They're going to talk about a little bit of tapering if they can, if they see the data or not. Definitely pay attention to the press conference, because every time Powell answers a question, you're going to see volatility in the market. It's pretty cool to see, pretty cool to take a look at how the markets actually react to real-time questions, Q&As pretty much.
Like
with,
side by side.
Right, with central banks. And then going into Thursday, you have the OPEC meeting, which we know is very important right there, that we just talked about in the beginning of this outlook. And then you have interest rates coming out from the UK as soon as New York session opens up. So expect volatility then as well. They have unemployment claims coming out. You have challenger job cuts. And now you're preparing for what's going to happen for NFP. You also have prelim non-farm productivity coming out. So now you're preparing for what's going to happen with NFP on Friday. And then you have the Treasury currency report. So that's pretty much it from a fundamental perspective and the economic outlook. Now we're going to go ahead and move on to the technical side.
It's a very heavy fundamental week. So rightfully so, like that, we have to break that stuff down. But let's get into the technicals over here. And what I was saying before and what Sharma was going over also is that this month is going to be heavy for monetary policy, not only this week, but the whole month. Because think about Great Britain and what they've been talking about when it comes to increasing interest rates. Are they going to do it this month? Is the US going to start tapering this month, right? Towards the end of the month. So this month is going to be pretty crucial when it comes to monetary policy and what some of these countries are going to be doing. But as you guys know, we've been in this multi-year bearish trend over here. We recently just broke over here, right? After we broke 156, we are holding support on the higher time frames. This stuff obviously isn't as important right now based on the fact that, last time we were at 120 was back in 2012. So getting into the more recent price action, as you guys know, we've been in this recovery phase from COVID, March and April of 2020. Ever since tapping into 124, we've just been in this bullish trend. We rejected that area, rejected the previous low from the Brexit announcement, brought us all the way back to 128 recovery phase. And then after COVID over here, we've just been bullish. So we'll just do a little trend line over here to help us, breaking off of that right over here as well after retesting 149. But our most important confluence, support and resistance, we're going to be marking off 156 as that crucial level we've been waiting for.
And again, this trend line that Stefanos is making, we're just doing that to visually show you guys what the trend is. We're not trading based off of, is it going to tap it, bounce off of, and that's your buy or sell, right? So that's just visually to show you guys what's happening in the market.
Exactly. So we're just going to mark off 149 down here as well. As you can see to the left, multiple wicks rejecting that area for multiple months. This is the monthly time frame, and then also holding that support. And then if you look to the left as well, get a previous support over here. So 149 was a very crucial level. We were wondering if we were going to break below it, and we never did. We ended up holding support over here, reacting to this trend line, bouncing for the third time. And now we broke above 156, but now we're starting to reject 156, right? We're starting to break below it. So are we going to end up rejecting it fully and continuing right back down and maybe ranging in here, or maybe tapping off of this multi-year downtrend, creating that support in here, maybe consolidating in here on the lower time frames, and then we continue right back up to retest that high, breaking above 156 when they do increase interest rates, right? So this whole move right over here, actually this whole month of October was all hype of increasing interest rates. That's all this candle was. Yes, technically it reacted to this level, but all that hype, you had multiple weeks where we were just having bullish pressure, bringing us all the way up to 156, easily broke through 156 and then tapped 158, 200. And now we're rejecting over here. So
there's a high chance that you're going to end up seeing that this week as well, as we're going into interest rates actually coming out, whether or not it's going to happen.
100%. I like this formation over here on the weekly. It's pretty clean, right? We had that high created, come down to 149, retest that trend line over here, and then we just basically skyrocketed all the way up to 158, 200. So we'll mark off this level right up here. And then if you look to the left, we had a little reaction to that level as well, multiple times. Previous support, we had this price action in here. Anything else to the left? And not too much. But 158, that whole level right over there, price was reacting to. You can see it on the daily, I believe. But I want to see what are we going to do once we do break above 158, just so that we have that level and we know what we're going to be looking for. I like this wick over here at 160, also the psychological level. So I'm just going to mark off 160 right here. And that's all we really have to worry about right now, because we are rejecting 156. So no need to waste time on, future where price is going to go. We're going to be doing plenty of these breakdowns for you once price does get up there. So no rush. But
one thing, if I can add, before you go ahead and move on to a different time frame, is that there's two things that just happened here. So on the weekly time frame, as Stefanos was talking about, from monthly time frame and coming down to weekly, we were in a multi-year bearish trend. We kind of just broke that, at that 156 level, right? As soon as we broke that. So whenever a trend is broken, what do you need to see happening? A respect of that trend and then a continuation up. So that's the very first thing. You just broke that trend. We haven't even respected it just yet. And then another thing is you had this consolidation, or actually, let me undo this and then there you go. So you had this consolidation that was happening here, right? More specifically, right into this area, right? And so you break out of consolidation. Now, what do you need to see happen? We haven't retested that consolidation, right? Price has obviously been sitting in this area for multiple weeks, collecting all those orders. So yeah, there was a ton of volume in that couple of weeks ago when this candle broke out, but we have yet to retest this area. We have yet to come back and kind of tap into, this pretty much zone between these two levels right here, and then retest this and then continue back up if we are going to continue. So that does two things. You retest the broken consolidation area, which is the normal price action. That's how break and retest usually works. And then also you're going to be retesting that broken structure to the downside and then continuing back up. So that's going to be a very important level if you are looking for any sell opportunities as price continues down below 156.
100%. I like the weekly, like I was saying over here too, because we got this strong rejection right here, right? This candle ended up closing bearish. What I was seeing over here was that once we ended up closing like that, normally we actually fill that wick on like the 30 or the 1 hour. If price is in this bullish trend like this, if we end up tapping into this area, creating that top wick, and then the bottom candle could be a strong bearish candle, but it barely has a bottom wick, right? And when it does that and we end up holding support right here, we end up filling that wick and then continuing right back up. Not to mention, if you take a look to the left, I talk to the guys in the group all the time about this. Actually, we'll go back to the monthly shortly. Right over here, this was our market recovery from the 2008 market crash, right? Very similar price action. I pointed this out to you guys before. Very similar price action, very similar market environment of where we're at right now as well. So you can use this as a guideline. We didn't exactly close above. This took 2 months for price to break above 156 over here. This took only 1 month, but it didn't exactly close above on the monthly, right? We're rejecting it right over here. So we're not exactly above right over here, but we did reject this level over here, 158, 200, I believe. So right over here, what I'm looking for is some kind of a close above that level, a retest. Maybe we get candles like that. This is what I was looking for last week. If price was going to end up closing above like that, maybe we would get the next month retesting 156, weak bearish candle. The next one, we end up increasing interest rates or tapering, whatever Great Britain wants to do, and that's what sends us up. So that's just a good guide for you to go off of over here. But going back to the weekly, again, what I like is this candle right over here. We never ended up really holding support with the current weekly candle creating a top wick, passing the low of this weak bullish candle. But what I wanted to point out were these wicks right here, this wick, and now supposedly that's the top wick for this candle right now, and it's passing the low of that candle. You have a massive move right over here to the left that you can mirror and take price down. You just need price to break certain levels on the lower time frames. That's all. That's how simple trading is. It's just breaking levels, waiting for a price to break out of an area where it looks like it's stuck, consolidating, waiting for that, and then you just wait for the next level, look for a retest or look for a strong close, and you just take price out. We're down.
And so it's still very early in the week to even determine that, right? But now you just have to create those zones. So like maybe that zone right below 156 level, because that's also that resistance zone from the monthly. You're going to see that on the weekly. Yep, right there. And now if price can clear below that zone, give you a break and retest on some of those lower time frames. And what I mean by that is, well, you're seeing this on the weekly, monthly, and daily. A 15-minute break and retest isn't going to take you down if you don't see that break and retest on the hourly or 4 hour or the daily, right? So make sure that you're looking for those time frames. If this is on a monthly, weekly, and daily, then look for that break and retest on the 4 hour, the daily, or even the weekly for you to continue down, not just the 15-minute.
Absolutely. So as Sharma was pointing out, this level 156, obviously strong level. We rejected multiple times over here. We thought maybe we could hold support with the candle last night. we were holding support yesterday during Sunday open. We're starting to push up. It looked like maybe we would continue to consolidate in here and then maybe retest 158 if the rumors were true that they were going to increase interest rates. And like I just said, we were going to push right through 158. But we ended up breaking down, closing below yesterday or today. This is the new candle. If you take a look at the lower time frames, which we're about to do, you're going to see a perfect move where price ended up retesting 156 and rejecting. Are we fully rejecting yet? We don't know yet. You just got to wait for that. But right now, we had a perfect move with consolidation above 156. Nice clean close below. Our next level, like we were just talking about, is going to be 155, 350. Right, this previous support over here. Got a clean move right down to that level. Now, this isn't exactly a weak close below the support over here, right? This is a nice confirming candle, knowing that, and it's a 4-hour candle, knowing that we could possibly continue down if price ends up maybe retesting 156 and continuing right back down, kind of like this, right? Yep. Maybe we can consolidate up there a little bit, but the one of the most perfect setups that I look for every time was what we had tonight, right over here. Let's make these zones a little bit neater. Got that rejection of 155,900, where this candle ended up closing a very weak bullish candle. We get the top wick formed on that candle, and it passed the low of that candle. I'm not talking about the 1-hour time frame, but I do like the 30 and the 15-minute because I do look for this a lot, where you get multiple rejections, and it looks like this candle, like when you guys first starting out, or when you guys first start trading, you're going to be looking for these break and retest setups, right? And a lot of you guys will take a sell after that candle closes, right? Or this candle ends up passing the low of that candle, right? Price wanted to retest, and it wanted that volume in like 8:30, right? The time right now, actually, which is where we got this drop over here. Price wanted to wait for that, and it wanted to tap one more time. It wanted to grab liquidity, right? So just be aware of that, especially during Asian sessions, that, maybe price is not going to, retest the low right away. Maybe we want to grab liquidity again. And I guarantee this candle probably passed the low of that candle right away. A lot of people took sells and a lot of people got stopped out, right? So just be mindful of that, especially during Asian session. This candle passes the low of the previous candle right away. The first 2 minutes, just wait. Don't get FOMO. Don't think you're missing the trade. Just wait for it, and maybe you're going to get a better opportunity and maybe get in at a better price as well.
There's another thing that I want to add, and this is a question that I get a lot from people, which is like using multiple time frame confluence, structure, break and read, like all this type of stuff. So if you could go back up to the 4-hour real quick. So at this level, the zone that we have marked off, that was a support that price held. First of all, notice what's the structure down here, right? Overall, we're in a bullish trend. We have already identified from the monthly time frame and down that we're in a bullish trend. Now, we also talked about how price broke out of that consolidation, also broke structure, and needs to retest. Well, how is price going to do that, right? If you're in this bullish trend, the only way for your retracement is to pull back. You're going to see that also in consolidation, where price is simply just making higher highs or higher lows, depending on what the overall trend is, even if it's just consolidating, right? And I'll point that out too. And then a continuation back up. So in order for us on the daily time frame or the weekly time frame, for us to come back and retest these levels down here, which was the consolidation resistance, we need to see lower time frames push us back down and start that bearish trend. So that's what we're seeing here right now, where you're in that bearish trend. Price is now continuing that bearish trend. Well, then, Sharma, how do I know that this is a bearish trend? Well, notice how in the past couple of weekly outlooks we were talking about, that's the bullish push. Once that bullish push is broken and retested, that's how you know you're in a bearish trend. So obviously this would be like a key area of support for you. Once that's broken and retested, price creates a support, pulls back up, and then creates a low. Notice how price made a support down here, pushes back up, grabs liquidity, and then continues pushing down. But again, what does it do? Just tap into this area, grab some volume. This is a very strong support area. Market had to pretty much grab orders from here in order for it to continue pushing down. That's consolidation, but it's still continuing that bearish trend, right? And then also where you have that zone marked off exactly, Stefanos, where this is your support area that also respected previous resistance. right? That bullish candle is sitting right at that level, that respected previous resistance. That breaks, and this zone that Stefanos has created, which is that bottom wick rejection, continues down. That's your sell opportunity to the downside. Now let's take a look at this on the hourly time frame, right? What just happened here? So in the 4 hour, you have that top wick on the bullish candle, and then on the 1 hour, price breaks below all this consolidation that happened here, breaks below that, and all it's really doing is just retest. That's all it did. And now it's continuing back down. Now you see another retest and then continue back down. How a basic bear structure works. So don't let consolidation kind of trip you out about that, right? So yes, this is all consolidation if you start narrowing in where the candle's actually closing, but this is price still following the same exact structure, which is create a support, come back, retest this, which you saw in the 30-minute time frame, 15-minute time frame, doesn't matter, drop down to those lower time frames. You will see candles closing here, right? So it creates that retest, and then now it's continuing back down. You just need to now wait for this low here to be broken, so then you can continue down to this zone, catch your 10, 15 pips, whatever it is, and then wait for another retest here, and then continuation down and continue catching your pips, whatever amount that you go for.
Amen.
Yeah, so that's multiple
call.
time frame confluence. Yep.
Yeah, 100%. Great call with that rejection as well on the 4 hour. Right over here. Got price right over here, previous resistance. Yeah, that's nice. I like how we're rejecting that area right now. And if you take a look at the 30-minute, almost technically kind of like a fake out right here, which is what I was kind of pointing out before.
There you go. So that you had a candle close up there with the top wick rejection, which caused that top wick on the 4 hour, which caused that pullback, all that type of stuff. But the key thing here is this 4 hour is going to close in the next 13 minutes or so. So is this really a good time to take an entry? Probably not. Wait for the next 4 hour, wait for price to break out of this hourly consolidation, and then look for your trade.
And what do we always talk about with fake outs? There's a good probability that price is going to break out the other side, right? 60 to 70% chance, I would say. It's like an 80% chance that we're going to retest that support. I would actually put that at like 85 or 90. That if you get a successful fake out in the downtrend, price is most likely going to retest that support. And there is a good likelihood that price is going to break out of that support and continue through. So that's what we're looking at on GJ over here. Let's see. Yeah, I really do like this level 155, 400, you could call it. Nice psychological level. Price is going to be tapping that if we do break through 155, 600. So maybe just wait for a little retest right over here. Break that, retest this level, and continues right back down. You have about 20 pips in here. So not too much volume in these ranges, but you got about 20 pips that you could catch price right back to 155, 400. All right.
Awesome. Let's head over to gold.
Head over to gold, which is doing nothing. So gold, something interesting I wanted to point out. And I'll be able to point it out, I believe, on the daily. But as you know, we've been in this bullish trend over here, right? COVID ended up pushing us up to historical highs, along with multiple other reasons. Trade war with China, Iran tensions as well, pushing us all the way back up. But then we entered this corrective phase where the world started to calm down a little bit. We started to learn more about COVID. So, vaccines came out as well. Then we had fears of inflation pushing us all the way up here, along with geopolitical issues, and then 2 solid NFP months. So that's basically a quick fundamental breakdown of why gold is where it's at right now, right? So let's mark off some of our levels like we did with GJ, 1680. So gold sitting right here at 1680, rejecting multiple times. So that's a strong support over here. Are we going to end up holding this higher low support around 1754 to continue right back up? Or are we going to end up breaking this level and continuing right back down, retesting 1680 and pushing us through? Many things need to happen for that to happen. Let's go down to the weekly over here. The weekly, again, we've been in this corrective phase. Price pushing. All right. Creating new lows, new highs, and now we're actually consolidating on the lower time frames over here. So psychological level again, can
Give me
be.
1 second here. I'm going to go ahead and turn on the light. I'm just going to pause the recording. Let's get started.
All right. So we marked off our level right over here around 1747. We're going to move that as we go down the time frames, but that is holding a successful support over here along with previous resistance right over here and right over here as well. So actually, if you look to the left, get some confluence with these levels as well around this area, previous resistance, right? All the way up to around 1800, right? Price ended up holding this resistance over here. So we'll actually mark off 1800 because it is playing it to our favor on the lower time frames. But as you can see, price is holding that resistance right over here. But what you have right now is price opened how many pips below where it closed over here? Actually closed up there. It's a gap. Opened about 135 pips below. So that's what we call a bullish big belt. We've held support at 1747, right? And we're pushing up. Now, a bullish big belt, normally on the higher time frames only, I don't really pay attention to this on the 30-minute, rarely happens. But when you get something like this, whatever candle or whatever direction that the candle closes is going to end up going continuing in that direction. So a bearish big belt would be a bearish candle opening up a ton of pips above the close of the previous candle, and price ends up dropping after that.
Well, you have that right there at the previous resistance.
There you go, right over here. Actually, I think a bullish or bearish big belt, it would be up here, right? The open would be up here.
I think it's below that, and then the bullish one is above.
Well, the bullish one right here is below. I don't know, guys. Read Naked Forex. But yeah, I believe like if this candle closed, this is what we'd be looking for. Is like this candle.
Yeah,
essentially like that.
Essentially, what you have happening here is when the market closed. Let's say, for example, if you're looking at just simply like what's going on in the market from like a supply and demand perspective, you had a lot of bullish volume right when this candle closed. When the following one opened up, there's already orders that are being put into place. So you have, again, just like you have a lot of different traders in the market, you also have a lot of different orders that are being put in, right? So you have the market execution, you have limit orders, all this type of stuff. So essentially there are a lot more orders down here, and that's where you have that gap. But whenever there's a gap, it always gets filled up. And we also see that a lot on lower time frames. So same thing down here, you had a lot of bullish volume last minute, you had that top wick being formed, and now you had more orders that were waiting down here that have to be filled. But again, there was a gap, and now you're seeing price push up and kind of filling that gap.
Absolutely, I love it. So again, we're kind of just sitting in this area right over here. I like marking off 1830 as well. Had that previous resistance up here.
Mm-hmm.
Wow, almost had it. But right now, price is holding this resistance, previous support over here because we rejected multiple times. Not that we have any bearish candles yet on the higher time frames, but right over here, we just keep rejecting. So looking at the daily, price is just kind of ranging in here. Very messy, a lot of big wicks and smaller candles as well. A couple big impulsive candles, but as far as most of them, they're all like smaller candles and big wicks. Mm-hmm. But since tapping into this area of 1730, 1720, we've been bullish over here, pushing up. I'm also going to mark these levels off too. 1720. Previous support over here as well.
This is actually a big consolidation. Now that we're going across time frames, this is actually a big consolidation on the monthly itself. Because if you look at the daily and you look at the monthly, you could tell price hasn't really broken out of this, let's say 1730, 1740 to 1815 range.
This is why I've stayed away from gold for a couple of weeks now. It's not worth trading for me, at least. Everyone's got their own opinion, but I'd rather just stick to GJ. We've had multiple weeks of massive GJ run, so why would I even need to touch gold in a consolidation like this? Like, I'm not going to force trades, but this is that bullish big belt that you guys see over here. right? This candle ended up rejecting, still closing bullish. This candle ended up opening 134 pips below the previous close over here. So are we going to form a bottom wick right now and continue right back up? Or, what are we going to do? Are we going to continue right back down? Our next daily level, I'm going to mark off a support right over here. We got multiple rejections of this area. And then we have one more right over here. But again, this market is very messy over here. So you just got to be careful trading in this.
Just extend that over to the left and you're seeing that price is rejecting key levels.
Right over here.
This one, and then also the one right above that.
Yeah.
That one is rejecting that support, where price previously created support. That's exactly where it created a higher low and continued pushing. And that's what we're doing right now as well. We're creating a higher low at previous levels that have been rejected as support or resistance.
Yep. Now looking at the 4-hour over here, it looks like what we had was a break of this trend line. And like Sharma was pointing out on gold, what was that, GJ? It was GJ?
GJ.
Yeah, okay. So where we ended up breaking that bullish trend, and now we're coming up to retest it over here to maybe continue down and retest this low, right? We just need a strong confirmation that price is closing below. We could actually just get rid of that. Extend this to the left, and we know that that's significant. It's a significant level. But we need a strong bearish close over here on the higher time frames to know that we may be coming down to retest that low.
Yep.
Those bullish big belts, it doesn't always happen. It's not always, a sure thing. So you can't like marry that bias.
Another key thing is even like on the 4-hour time frame, if you go back real quick, we just broke the structure, right? So unless you're a swing trader, you're not really going to be waiting for the daily time frame every single day, right? You're going to use the daily time frame as a confirmation, but now you do the same exact thing what you would do on the 30-minute, 15-minute, 1 hour, whatever, where you start looking at levels that need to be broken so you can take a trade. So here, for example, right at this level, that's kind of where we're sitting at. If price can break below this area that has been respected multiple times, well, then where are you headed next? And then you start identifying, these next levels maybe coming all the way down here. And that could be the start of a bearish structure, which helps just that consolidation that we're seeing on the monthly time frame.
100%. And I think that just goes to show like how important it is to just look left. It just gives you more confluence, right? Let's see, we were on the 1 hour.
Yep.
So the 1 hour, again, right over here, we're starting to push, creating lower lows, lower highs over here. But we have a rejection area right here at 1790, also psychological level. 1790 also has it's been respected multiple times over here as well. Not as much, but right now it is rejecting over here. So I think a safe sell, at least on the 1 hour, is going to be below 190. I'm going to form this resistance right up here. Let's see what we look like in the 30-minute. Yeah, so the 30-minute, what I'm going to do is going to mark this off. I don't want to take anything in here. And all I'm going to do is wait for price to break that support. We could continue right back down to at least 1783 for a nice scalp. And this will be a 65 pip move. So that's what we're looking for on gold as far as sells. And then if we break resistance over here, could be retesting 1800. Obviously, wait for that break and retest over here. I think 1800 will be your next psychological level. Obviously, 1798 is also a little rejection level as well. If you look left, that gets respected multiple times. So 1798, you probably have about 50 pips. Maybe 45, 35, right in here with a clean move to the left. If you break and close and possibly retest, compared based on the setup, if you get a clean close above, maybe you can take a breakout trade if you get some volume. But I would wait for that to retest and take this right up to 1798 and eventually 1800.
Yep. So the important thing is use those higher time frames. Use that monthly, weekly, daily, 4-hour and 1 hour time frames. Make sure they're in your direction before you're taking the trade, so you're not going against the overall trend of higher time frames. And then also trade safe already know going into your trades, what's your risk management going to look like? What's your strategy going to look like? What kind of entries are you looking for? Other than that, very important, heavy fundamental week. So, look out for
And month.
fundamentals. What was that?
I said and month.
Yep.
Yeah, the whole month is.
The entire month, and then even going into December, same exact thing. So you're going to see consolidation, but again, just look at the structure, look at those higher time frames like we just talked about, and then also pay attention to the fundamentals. Other than that, we will see you guys on Wednesday for the live session. It's going to be at 6:30 a.m. Eastern time, which is 3:30 a.m. On the West Coast here. So we'll see you on our YouTube channel.
Guys, new month, right? It's November 1st right now. So challenge yourself to get more out of yourself this month. Make sure that you're back testing. Make sure that you're journaling and also just reading on different strategies or reading on economics, reading on fundamentals. Just challenge yourself to get better this month, right? A lot better than you were last month. Even if you had a great month, cool. Put the pressure on yourself. Make sure you get even more out of yourself this month. And if you have any questions, just let us know and reach out.